Welcome back to the Retire Young Radio Show. I am your host, Joshua David, having a good time talking about financial literacy and the financial markets. Al, as we get into this next segment, I kind of ended the last one about the smart money, the institutions. Right. They are the ones that control the market, the Buffetts of the world, the Goldman Sachs. Now, there's a big disconnect from the returns of the smart money and the returns of the average investor. So let's talk about how they create income in their accounts, the smart money, but also those techniques and concepts, those are also available to us. Right. So let's dissect that.
Yeah, well, first of all, understand there's two groups that participate in the markets. There's that smart money, which you mentioned, which are the big banks and institutions and maybe hedge fund managers. And then there's the other group, which is the public, the amateurs, what we call retail traders. Well, ask yourself this, who's more successful and why? And who's more consistently successful and why? It's the smart money, obviously. The problem I think most people have that are not pros, not that smart money group, is that they think, act, and execute like other novices, like other retail traders, not like the pros. So our goal is to have our students think, act, and execute like the smart money.
You know something, Al? There's some stats going on. I can't remember where they're from, but there's the majority of the people ask a buddy or a friend on how to invest.
Sure.
And the public just doesn't know that.
Yeah, and you know what? It's part of that emotional part of trading, what we call the herding effect, where people don't want to be the only person doing something or the first person. They want to be part of a group, so they just follow what other people are doing. Unfortunately, they're typically following somebody that doesn't know much more or anything more than they do.
Yeah, so what are some of those techniques that the smart money is using?
Yeah, well, they're looking at different assets that they use. You know, they will put their clients into typically a stock or mutual fund portfolio that is intended to be a long-term hold, decades, 20, 30, maybe 40 years. And what they're doing is they're trading on a daily or weekly basis. They're trading things that are short-term. There's a difference between, how you trade or how you invest, I should say, for your long-term wealth. And that should be part of everybody's financial plan. But also, maybe you need some additional cash now. Maybe you have some bills that are a little higher than you thought, or maybe some kind of an emergency has come up and you need short-term cash.
Well, and just so everybody knows that, trading and investing isn't always that avenue, but for some people it could be.
Well, exactly. And that's why people come to these classes. They want to see if this is the right thing for them. They want choices in their life. And there are a number of ways that you can do this. You can get a second job or a third job. You can work overtime. Maybe you look at real estate, or some people choose to look at the financial markets. And I said markets, that's plural. It's not just the stock market or the mutual fund market, which is really the stock market. That's what most people are familiar with. But the institutions aren't just using stocks for their investments. They use short-term vehicles, which again is something that if you need cash on a short-term basis, that's maybe something you should look at. We're talking about the futures market, the foreign exchange market, the options market. Typically, those are assets or strategies that you can use for short-term. Futures, maybe daily trading or trades for a couple of days. With the foreign exchange market, what we would call a swing trader, swing trading, which is maybe a few days to a week or so. Options can be used for short-term, mid-term, and long-term investing.
So, Al, you're talking about short-term. Just clarify, because a lot of people are thinking, oh, I don't want to day trade. Does that mean day trading?
No, it doesn't.
And that's kind of a thing in the past anyway.
Well, it is. There are a number of different things, different, avenues that people can follow. You choose, and any kind of education you get should really cover all the different time frames. Some people do want to trade on a daily basis. That's fine. There are strategies to use for that. Most people want to be a little more passive and maybe just look at maybe making a few trades a month or, whatever you choose. Maybe it's only one or two a year. Maybe you're looking at more long term.
So they have those choices then.
They have those choices. But the important thing is to use a foundational core strategy that you can use for any time frame and any asset. And that actually for our students, we call that a core strategy. That's the foundational part of your trading, where you are identifying with a high degree of accuracy those turning points in the market based on institutional activity. And really what we're looking for, when you think about it, when the institutions place an order, the orders are filled, and then the value or the activity has already taken place. So the important thing would be to identify unfilled orders that want to become filled. If you can identify where the unfilled orders are living, kind of on a supply and a demand zone that I mentioned before. That gives you the opportunity to be prepared. So when the institutions, come back and fill some unfilled orders, they're going to actually provide the movement in price for you.
Yeah, it's kind of like the average investor wanting to be a mouse and taking pieces of the cheese as the smart money, the big money is moving these markets. And it's all about having alternatives other than just mutual funds. There's stocks out there. That's a great avenue. But there also is those futures and Forex markets. And I want you to dissect those a little more as far as what they are coming up shortly here. But when you talk about just these different techniques and these different concepts that the smart money is using in these investing classes, it's really, it brings out more opportunity. And that's the key in what I've been seeing with people coming to these classes. They want more opportunity and just have more control or confidence in their investing. So if you're that person and you want more confidence and more control of your investments, Al, let's continue this discussion on these leveraged asset classes, the futures market and the Forex market. Talk a little bit more about the buying power, how great that is, but also a lot of our listeners probably work during the day and they're stuck to, evening trading and investing. Well, that's kind of tough, the stock market. Right. Let's talk about the timing as well.
Yeah, the stock market is open 6.5 hours a day. So there's a limited period of time there if you want to be active in that market. Well, what if there was a market that was open 24 hours a day? And there are two markets that are open essentially 24 hours a day. One is the futures market and one is the foreign exchange market. Futures is 23 hours and 45 minutes, but essentially 24 hours a day for both of those. So it gives you a lot of choice there as to when you want to invest. And what we find is that no matter what you choose, what asset you choose, you're going to find a kind of set up a niche kind of a thing for yourself, something that works for you. And it may be based on the time of day or night that you trade, but you have the opportunity with Forex and futures to do that.
Yeah, think about that. The Forex market, that's what facilitates international trade and investment. That has to be open. I mean, you have our market open up at 8:30 our time, the Asian sessions 7 p.m. our time here in Minneapolis. You have the London session. So basically over in London, they're getting up for the day. So there's a lot of volatility. So people that want to trade in the middle of the night, they can do that because it's open.
Yeah, it's open. And there's a lot of liquidity with those assets, futures and Forex, which means that you should never have a problem finding somebody to buy or sell from you. And the spread, the difference between the bid and the ask, what you buy and what you sell something for, is very narrow. And that's really what you want to look for.
And remember, that's just electronic. The platform does that for you. So when you're placing your trades, you're clicking the buy button or the sell button.
Yeah, it's very easy. I mean, the trading platforms that are available now are very helpful. Things have been really simplified compared to what things were like maybe 5 or 10 years ago. And one of the reasons that the Forex market is so active is that there's a lot of big companies that do business on an international basis, and they're dependent on currency fluctuations for their profits. So they're very aware of these markets and active, but it gives us the opportunity as speculators, investors, to take advantage of that. Again, the 24 hours is huge, but the leverage, and we call these leveraged assets because that really is one of the big advantages with these. Typically, if you open a cash account, brokerage account with stocks or mutual funds, it's a one-to-one relationship. In other words, every dollar buys a dollar's worth of stock or mutual funds. With the leverage, every dollar buys a multiple of it. So this opens the door for smaller accounts. The pros use these leverage assets because it really maximizes the purchasing power of every dollar they have.
And just to clarify, it doesn't mean that you can use small accounts. It just means the broker requires less.
The broker requires less. Look at it very similar to a mortgage. You can buy a home that's maybe worth $400,000 or $500,000 with a down payment of maybe $40,000 or $50,000. That's leverage. You now control $400,000 or $500,000 worth of an asset for $40,000 or $50,000. That's leverage. We do that with loans, with credit cards. Yep. So most people are actually participating in that leveraged arena, but not in the financial markets. And those are available to all of us as individuals, and they're assets that can be used in your individual retirement accounts. If you have a self-directed retirement account, you can use assets like futures, like Forex, like options. And these give you the opportunity to participate in different market directions. Forex and futures can be used in up markets, down markets. So in other words, you can buy and you can sell contracts. With options, you can use those in an up market, a down market, a sideways market, and a fluctuating market. And you can have one options position that will benefit whether the underlying asset goes up, down, or sideways.
And that's the great thing is all these techniques that Al is talking about, these strategies, the smart money is doing this every single day. And the average investor doesn't even know it's available. Well, if you've listened to the show, you probably do know it's available. And maybe it's time to learn these techniques and learn what they are, why the institutions use them. Because remember, we want to trade like them. We don't want to trade against them. And you mentioned multiple directions. I mean, we all know as markets go up, there's buying and you profit as it goes up. Well, you can actually short the market in a down market. Basically, you can open your position on a high point and close it at a lower point, and the difference in between there is the profit. And that's what you can do called shorting. Al, you just mentioned retirement accounts, IRAs and 401ks, the different you mentioned multiple market directions in there.
Right.
I want you to get into those retirement accounts, what they are, how we or us as average investors can take more control of them with confidence. This is Josh and Al. We will be right back.